Hey everybody, Smart Silver Stacker here. Anyone who has been listening to Fed Chair Jerome Powell knows the Fed is committed to fighting inflation, no matter what, even if that means completely imploding the global economy, right? Well, that's a question that we're going to learn the answer to very soon, because that is exactly what is beginning to happen. Ever since the Fed began the recent round of hikes to the benchmark federal funds rate back in March, the US dollar has been steadily appreciating in strength relative to foreign currencies. This stronger dollar has put tremendous pressure on emerging market economies, making US dollar denominated debt more costly to service and also increasing the cost of commodity imports, which are often priced in US dollars. A massive sell-off in emerging market bonds is also ongoing, as emerging market bonds' typically high yields are less appealing in light of higher rates on dollar-denominated debt. A recent analysis by JP Morgan shows that in the past week alone, investors have taken $4.2 billion out of emerging market bond funds, and total outflows for 2022 have reached $70 billion. This situation is creating a vicious feedback loop, as foreign holders of US treasuries are being forced to liquidate their treasuries in an attempt to support their currencies. This in turn drives US treasury yields even higher, resulting in an even stronger US dollar. On Monday, the United Nations Conference on Trade and Development warned that rate hikes could lead to a global recession, stating, "The current course of action is hurting vulnerable people everywhere, especially in developing countries. We must change course. Any belief that central banks will be able to bring down prices by relying on higher interest rates without generating a recession is an imprudent gamble." And it's not just emerging market economies that are feeling the pain. The Japanese yen has declined by 20% against the dollar in 2022, and last month Japan spent nearly $20 billion in an intervention to prop up the currency. It's only a matter of time before Japan, the biggest foreign holder of US treasuries, is forced to liquidate their US dollar-denominated debt to protect the yen. And it was just last week that China, the second largest foreign holder of US debt, began telling its banks to prepare for a coordinated intervention of dollar selling in order to prop up a depreciating yuan. Now, combine all of this with the fact that so far, the Fed's program of quantitative tightening has reduced their balance sheet by less than 2%. They still have more than $8.7 trillion in treasuries and mortgage-backed securities on their balance sheet that they still need to sell, which will put even more upward pressure on US Treasury yields. And all of this is already starting to break the markets. The Bank of England has already been forced to pivot and resume quantitative easing, and yet the Fed has only raised the benchmark federal funds rate to 3%, not nearly enough to combat inflation of more than 8% annually. We are less than half of the way to achieving positive real interest rates, and already central banks around the world are being forced to intervene to prop up their currencies and debt markets. The economy is already well on its way into what will likely be a deep recession, and inflation shows no signs of abating anytime soon. When you combine all of that with the deindustrialization of Europe, one of the worst energy crises in decades, and a global economy so encumbered with debt that any move up in interest rates results in massive increases in debt service payments, and it quickly becomes obvious that the Fed is in a position where it is damned if it does and damned if it doesn't. The Fed now faces a choice of continuing to hike rates, possibly triggering a cascading wave of debt defaults and collapsing the entire global economy, or pivoting and easing policy to avoid disaster and sacrificing the dollar on the altar of inflation in the process. And judging from the choices that the Fed has made in similar situations in the past, it seems likely that intervention is the route they will choose. But first, there will need to be some kind of a compelling disaster, whether it's financial or otherwise, to provide them the cover that they need to start the printing presses once again. But once they do begin rate cuts, or QE, or whatever they call the intervention this time around, watch out, because it is going to be on a scale that dwarfs all previous interventions, and inflation is going to run out of control. The price of gold and silver are in the green today. They had a big surge yesterday. But when the Fed starts printing again, the move that we had yesterday with silver up nearly 10% in one trading session, that is going to look minuscule by comparison. Investors are finally starting to wake up to what's going on, but when it becomes plain as day that the Fed's endgame is the destruction of the dollar, and look, It has to be, because that's the only way that the levels of debt that exist in the system can be paid off in devalued currency. When that day comes, I'm afraid it's going to be too late to get your hands on physical metal, because there might not be any available for sale at any dollar price. The good thing for us stackers, of course, is that there is still some time to accumulate physical metals, although, the window may be closing soon. And if you're looking for a place to get your hands on some gold or some silver or maybe some platinum, then check out sdbullion.com. They are my preferred bullion dealer. There is a link down in the description. And if you enjoy these videos and you'd like to support the channel, one of the best ways to do that is to support our channel sponsors. So check out sdbullion.com today and let me know what you think about the growing global debt crisis and the cracks that we are beginning to see in the global economy. Do you think that the Fed is willing to collapse at all to fight inflation, or is there a pivot coming? Leave me a comment down below. I always love to hear what all of you have to say. And thank you all very much for watching. I will catch you next time. Stay safe and happy stacking. Smart Silver Stacker, out.